folks, Alan Hefner here with Keller Williams and the Husted team out of Charleston, South Carolina. I wanted to do a quick video today because I've been hearing from a lot of different people. I have this conversation multiple times a week. There seems to be a misbelief in the market right now when it comes to first-time home buyers. I definitely like to specialize in first-time home buyers. There is a certain level of passion when it comes to those who are looking for their first home. You know, there's a lot of questions and there's a lot of guidance that's necessary to get them from point A to point B, or all the way to Z for that matter. I love every single moment I get to spend with first-time home buyers. There are a lot of agents out there that will just try to, speed up the process and get a transaction under their belts. I'm just being honest, right? So I'm not that guy. I will take the time to explain everything in detail so that you understand everything in the process, and I'm going to get you the best deal humanly possible, and I'm going to make sure you're comfortable with everything every step of the way. I have been known to talk myself out of deals or talk people out of deals rather than into deals, only because it's not the best thing for them. That aside, done talking about me and how awesome I am, but folks, seriously, there is a misconception these days in the market when it comes to first-time home buyers. They don't believe that they are able to actually obtain their first-time home. So I'm here to talk briefly today about that, just kind of give you some tips and pointers and things to look for when it comes to doing your research and knowing exactly what's going to be necessary for you to get into first-time home buyer status. So first and foremost, you might have heard of a pre-qualification and how important they are. Pre-qualification is paramount. If you have a pre-qualification, that's great. If you do not have a pre-qualification, that's fine too. I always encourage people to come to me with or without a pre-qual. Pre-qual is definitely going to be the first step. It's paramount because it lets you know where you stand, where you're starting, what's necessary to get you where you want to be, or it's important to know what you can comfortably afford in a mortgage loan, right? So, for example, if you come to me and you say, hey, I don't have a pre-qual, can you help me? Absolutely. I have several lenders, as a matter of fact, that I have amazing relationships with in all my years of doing real estate in this area. I have several relationships with top loan officers, top mortgage companies. I hate to say this, but going to like a federal credit union or a local bank or whatnot, 9 out of 10 times, folks, it's not the best way to go. Now, I'm not saying that that's a bad idea. I'm not saying that if they're telling you, they can give you an amazing rate and an amazing deal, obviously go with that. But I would strongly encourage you to at least entertain the idea of reaching out to my lender or lenders and put them to work. Get them competing against each other. That's the name of the game. That it's a competitive business. Let them be competitive. Let them fight for your business. That's what I always tell my people. So I'll get you in touch with at least 2 different lenders. If we're doing a new construction home, that's a totally different game there. It just depends on which builder you want to go with. But there are some that are better than others when it comes to deals that they're going to offer you if you use their preferred lender, which is usually an internal company that builder will own, or in some way, shape, or form, they'll have a large amount of manipulation or control over. That being said, getting back on track here. So if you don't have a pre-qual, we'll get a couple of different banks to work for you and kind of run some numbers and see what the best way for you to proceed is. Now, once you start doing a pre-qualification, you're not locked into anything. This is just a necessary step to see what you can comfortably afford. What you want to do is you want to reverse engineer it. So XYZ mortgage company is going to offer you a certain percentage rate, you'll be able to see what your monthly payments are going to be versus another bank or another lender who's going to offer you another interest rate, and you'll know what your payments are going to be. Obviously, it's not always cut and dry. If your payments are lower, obviously that's going to be probably the ideal situation, but there's other things to consider. Closing costs, down payment, if the loan is transferable, there's a whole bunch of different factors that, depending on what is important to you, one lender might be better than the other. So that's where I would come into play. We could discuss all the options and kind of go over a broad, go over everything and make sure you understand exactly what you're getting yourself into when it comes to the loan. That way you're not just being proverbial carrot dangling in front of your face as far as what might be the best deal at the time anyway. If it's, most loans are going to be fixed APR anyway these days, but now for the record, I am not a loan officer. I am not a finance officer in any way, shape or form, but I know enough to be dangerous, and I can most certainly help you with the process. So if you don't have a pre-qualification, that's the way we would handle that. Get you in touch with a couple different lenders, see what we can find as far as the best deal for you. Go over all of your options once you get all this information from the lenders. Typically, we're talking 24 to 48 hour process. It's that easy. So you call me, I say, hey, that's great news. I'd be happy to help you out. We'll get you in touch with a couple different lenders. You can do online loan applications. Now, general rule of thumb, so when you start applying for a mortgage loan, yes, it's going to affect your credit. It's not going to be a game changer. The worst I've ever seen is 3 to 4 points. 3 to 4 points, it will affect it. Now, you do have a window of opportunity. Once you start pulling your credit for a mortgage loan, you have a 14-day window to do it repeatedly, and you'll only be affected that one time. The first time that you pull it, to 14 days, you can pull your credit for a mortgage loan and you'll be okay. So that being said, again, have them all compete against each other. Once we get the numbers back, we know exactly which lender you're going to go with. Boom. Now we know exactly how much of a house you can afford. So let's just say $400,000 house is gonna make you have a mortgage payment of whatever, fill in the blank. Whatever is best for you, we'll cater it like that. So once we've got word back from the lenders, we'll know exactly what you can comfortably afford monthly for your mortgage payment, right? You'll know what your income is. You'll know what you have coming in each month, and what you can comfortably afford going out each month. If you're paying rent these days, as a first-time home buyer, there's a strong probability that you are. You're probably going to be paying north of, realistically, you're going to be paying north of $1,800, which, we can get you into something similar to that, but chances are it's going to be a smidge higher. You need to be open to that possibility. Now remember, even if you're paying more for a mortgage payment, like let's wave a wand, you're renting right now, you're paying $1,800 a month. We're gonna get you into a mortgage payment where you're paying $2,100 a month. Yes, you're paying more monthly, obviously, but you have to think about the big picture here. For however long you've been renting that apartment, that house, whatever it is, for however long you've been paying that, if you're worried about the interest rates these days, which they're not even high, we'll get to that in a second. If you're worried about the interest rates these days, then think about it like this. Every single penny that you've been putting into that rental property is 100% interest. 100% interest. If you think the 7% or 6.5% or a couple weeks ago, almost 8% interest rates are bad, compare that to 100%. That's what you're paying for rent. That's what you've been paying for rent since day one, and that's what you will pay for rent until your lease is up. All right, so now you go from $1,800 a month rent to $2,100 a month for your mortgage payment. Now you're at a whatever interest rate, 6.5, 7, 7.5. That percentage, that interest rate is going towards the bank, right? They're making that much money off of you per month and over the entirety of your loan. The rest of that money, well, where's that going? Well, that's going to you and your equity in your property. Folks, there's no such thing as bad real estate. It doesn't exist. It doesn't exist if you have the right real estate agent and if you're advised properly in the process. That being said, now you have a $2,100 a month mortgage payment. You're building equity. When you cash out on that property, when you go to sell that property, and you call me to list your house, when you go to sell that property, minus whatever percent that you were paying off to the bank every month for your mortgage payment, all that money that you were putting up for your mortgage payment, you're getting it back in spades. Property values go up, so everything you put in, you're gonna get back and then some. So the process, going back to to what I started the video out as, until I got sidetracked, I apologize, I get excited about real estate. Is it possible for a first-time home buyer in this market to get a house? Yes, absolutely. But what drives me nuts, what drives me crazy, is people are scared to try. People listen to the news. They listen to friends, family, talking about real estate like 12 years ago. It drives me crazy. Folks, we are in a completely different market today. You cannot compare today to anything in history. You really cannot. Things are different now, and because things are different tactics and different strategies need to be put into play, okay? As a professional real estate agent, I can most certainly guide you down that road, get you to where you want to be. You will not get to where you want to be unless you start, right? You've got to ask questions. You've got to see what your options are. You got to get, you need to get the information necessary to make a logical decision towards what you want to do. So in a nutshell, yes, it's possible, absolutely possible for first-time home buyers to get their foot in the door in this market. A couple of things. Now, I would love to go in more detail about any or all of this. Call me. Let's set up some time to make an appointment. I can address this in person and go into more detail. There are different types of loans. So you've got a USDA loan. So as far as what's required for you to be a first-time home buyer, what do you need to bring to the table? What are the steps necessary to get you into a home? And this is in a nutshell. So get your pre-qualification, okay? They're gonna look at your credit score. They're gonna look at your DTI, which is your debt to income ratio. Those two things are going to factor what you can get a loan for, what the loan amount will be for. Based off the loan amount, your closing costs will be determined. Closing costs are the way the banks make their money. That's how they get paid. That's really the loan officer. That's how they get paid. Different companies are going to have different closing cost amounts. If you wanted to do a new construction build, you're going to get more assistance with closing costs there. If you wanted to buy a pre-owned home, we can ask the seller to pay for some of your closing costs, or you don't get any closing cost coverage at all. If you've got cash for that, that's fine. Now, USDA is no money down. You will have closing costs. FHA, you will have money down, typically 3.5% plus closing costs. So 3.5% of the purchase price plus closing costs. Closing costs, again, vary depending on the amount that you're borrowing. So anywhere between $5,000 and $10,000 would be a safe assumption in this area. That's plus your down payment on FHA. VA, no money down. You will have closing costs. And then conventional, there's a wide variety of different percentages that you can put down, but you will have to put money down for conventional. Typically it's 20% down. So if you've got cash for that, fantastic. You're definitely gonna be fine and dandy. So to sum it up, if you wanted to entertain the idea of doing new construction, so if you're limited on funds, if you don't have a whole lot of money that you can put out of pocket, new construction is definitely a good way to go. And again, like I said earlier, there are certain builders that are going to offer more advantages for you as a first-time home buyer if you do not have a ton of money to take out of pocket and put down. I've written several deals in the past where people have literally signed a contract to buy a new house. 30 days later, they move into their new house. They don't have a mortgage payment for a month and a half, 2 months. They came out of pocket nothing because the builder covered all of their closing costs. And there was a VA loan or USDA, or we were able to get, legally we can't do anything where you're gonna get your down payment covered, but your closing costs, we can cover that. So there are different ways to manipulate it. Folks, I just need to know what you need. I need to know what you're working with, what kind of a pre-qual you have, what kind of money you have to put down. Once you tell me all these things, imagine me putting all this information in a big cauldron and I'm just sitting here stirring it. I'm stirring the pot, and then boom, all of a sudden we've got this amazing recipe for success. Because that's what it is. I need to know what you need, and I need to know what you have to bring to the table to get you where you want to be. If you've got a decent credit score, if you've got some money that you can put down out of pocket, if you're ready to move forward, or if you're just trying to get information, if you're trying to gather the necessary materials and information to move forward in 6 months, 12 months, whatever the case is, I'm here to help, folks. I want to help you. I love helping people with real estate. That being said, the best time to buy real estate was 5 years ago. That's always a general rule of thumb. What you have today will definitely be worth more tomorrow. So until you have it, you can't start building equity. Property values are continuing to go up. Just in the amount of time that I've been doing this video, property values have gone up. Interest rates are they're holding right now. Nobody really knows exactly what to expect. I have some predictions, but we can go into that in more detail once you give me a call. We set up an appointment. We'll sit down face to face, kind of go over some options for you. But yeah, I hope this video was helpful. I hope I have squashed some fear. Folks, it is possible. After COVID, things did change a little bit. The fact that interest rates dropped down to where they were, honestly, because they were so low, the market is where it is now because of that. Interest rates are not high. They are not high. We are in a healthy market when it comes to interest rates. Property values, guess what? What was I just saying? Best time to buy real estate 5 years ago. Imagine if you had bought a house 5 years ago, what it would be worth today. Something to think about, right? If we were to flash forward 5 years from now, had you not bought a house and you're still paying 100% interest on your rent, on your lease, you'd be in a totally different world right now if you had bought a house in this market as a first-time home buyer. And remember, one thing I always tell my first-time buyers, this is a first-time house. This is not your forever home. 9 out of 10 people who buy their first house, it is not their forever home. I'll be brutally honest. The average life expectancy of a first-time home buyer's house before they sell it, and they call me, 2 to 3 years, 4 years tops. It's a way to get your foot in the door. You build equity. You let the market do its thing. The real estate market is very dynamic. It's always like this, right? You work with me, we talk. When's the best time to sell my house, Alan? I'm glad you asked. Let's run some numbers, see what's going on, and I'll present the facts to you. We can go from there. But the point is, you get into your first house, you build equity, you sell that house, and you've got a couple of options. You can stay in the house forever, you can sell the house, and you can get into a bigger house with the proceeds, the profit that you would make from that house, the equity that you built in that property, or whatever you want to do. A lot of people, I've told people in the past, they'll buy a house and their true intention is to sit in that house for X amount of years, and then when they have the proceeds after we sell it, they'll pay off their cars, they'll pay off their credit card debt, they'll pay off student loans, whatever they want to do. They'll sell the house, maybe downgrade or get into something else, whatever, but they're capitalizing on the fact that they're going to have equity built in that property that they bought, and they're going to do with it what they want with the proceeds later. Be it a bigger house, be it pay debt off, whatever. So with real estate, you have the option to do so many things. You know, these are large dollar amounts we're talking about here. So I cannot stress enough how important it is, if you have the option to get your foot in the door to become a first-time home buyer. Folks, I love talking about real estate. If I haven't made that clear in this video or any of my other videos, then I'm doing something wrong. I don't mind answering questions. I love helping first-time home buyers, and I'm here to help you. I'm here to help your friends. I'm here to help your family, all of the above. If you or anybody you know is looking for real estate in the Charleston, South Carolina area, I am here to help. If anybody's looking to buy or sell, I am here to help. I'm very knowledgeable with the area. I've been here for a long, long time now. I know all the builders in the area. I know all the neighborhoods in the area. I know all the different cities. I'm here to help, guys. Alan Hefner, 843-925-6766. I really look forward to talking with you soon. So let's get this started. All right, thank you so much.